In today's market update, we're going to be taking a look at the S&P 500 again. I've had a lot of feedback indicating that the way in which I am progressing the analysis through time has been really useful. I hope that continues to be the case. And I'm going to be asking a question in particular, which is which analysis is correct? Which is a question that we are always being asked. And I'm going to answer that question in today's video. My name is David Hickson, and today is the 3rd of September 2019. I must ask you to please make sure that you have read and understood these disclaimers before we take a look at the markets. So here is the analysis in the S&P 500 that we have been looking at in this series of videos, and as you will know, there has been some confusion around the placement of the 80-day cycle trough. In this analysis, it shows that 80-day cycle trough as having occurred on the 6th of August. But you will know from my previous market update that there is also the possibility that the 80-day cycle trough actually occurred on the 15th of August, or it might have occurred here on the 26th of August. This particular analysis, as you can see, places the 80-day cycle trough there on the 6th of August, but we have analyses that show the other possibilities. Here is a chart that I showed you in the previous market update indicating the nest of lows over here, and there were a few interesting points about this chart. In particular, the circle for the 80-day cycle trough was exactly below that low point in price on the 15th of August, and of course the nest of lows was very well centered around the 26th of August. Which brings me to the first point that I would like to make in this video, which is that there is a wealth of information at the foot of your charts in terms of these circles and whiskers. Many people focus on the diamonds, and that's understandable because diamonds represent certainty. But much more important are these circles and whiskers. And when you see a circle, it's best not to ignore it. You will often see some kind of a trough forming at the point of the circle, where you get a cluster of circles, or what is called a nest of lows, that provides another high probability time for a trough to form in the market. But now, what is the answer to the question? Which of these analyses is correct? Well, the answer, and there should be a drum roll here, but the answer is that we don't know. And I'm sorry if that's a disappointing answer to you. Many people I know find that very disappointing. But it is the true answer. We don't yet know where that 80-day cycle trough formed. We could spend a very long time debating each one of the potential troughs. And each one of these trough positions provides us with a good deal to argue in its favor. But in my opinion, too much time spent trying to achieve certainty in your analysis is actually a waste of time. And I know many people feel slightly offended by that idea because they spend a lot of time perfecting their analysis. So let me clarify what I'm trying to say and explain myself. Of course, we need certainty because we need to make confident trading decisions. But in my opinion, the certainty needs to come at the level of making trading decisions and not necessarily at the level of the analysis. Much of the time when looking at a Hurst Cycles analysis, you will have a good degree of certainty and you will be fairly confident, as I think you can see if you look at this series of market updates. But there are times when you do not have that certainty in your analysis. In my opinion, the Hurst Cycles approach to the markets is not a matter of trying to achieve certainty in your analysis, but it is a matter of keeping your mind open to the possibilities of what the cycles are doing and then making confident trading decisions on the basis of that, even if your analysis has some uncertainty to it. I know there are people who disagree with me, and so I should probably qualify that and say that that's my approach to Hurst Cycles. There are many Hurst Cycles analysts and traders who believe in achieving certainty in their analysis and then making decisions on the basis of that. But now let me explain to you what I mean by being able to make confident trading decisions even when there is some uncertainty in your analysis. First of all, I would like to interrogate these analyses a little bit so that we have some idea of what the uncertainty involves. So let's go back to the other analysis. So far in considering these analyses, we've only been looking at the diamonds and the circles and whiskers at the foot of the chart, which is of course the results of a pattern recognition-based analysis process, which tries to identify the troughs of the various cycles in the market. But you know that I find this purple line, which is the 20-day future line of demarcation, or FLD for short. I find it to be a very powerful tool which helps me to clarify the analysis, it corroborates the analysis, or sometimes it challenges the analysis that we are seeing at the foot of the chart. So, as you know, I track the interaction between price and the 20-day FLD. So, in previous market updates, I spoke about the fact that price found resistance at the level of this 20-day FLD. And ever since then, in fact, price has been tracking along that 20-day FLD. In an extraordinary display of the way in which price can do that, you can see that price first encountered the FLD over here 3 weeks ago, and ever since then it has been pretty much tracking along the FLD. In other words, the high of each bar has been above the FLD and the low of each bar has been below the FLD. There have only been 1 or 2 days, perhaps yesterday or Friday was an example, only 2 days in which price actually managed to break away from the FLD to the downside or to the upside. So a period of time in which price tracks the 20-day FLD for 3 weeks is really very, very unusual. I've had several people ask me, what does this mean? Well, all it actually means is that there is a very powerful 10-day cycle, which I think you can see quite clearly in this chart. There is a very strong amplitude 10-day cycle that has been causing price to rise up and then come down and then rise up and then come down and rise up again, and is possibly bringing price down again. So the 10-day cycle has a very high amplitude at the moment, and when a shorter cycle develops a very high amplitude, it tends to muddy the waters a little bit around the interaction between price and the longer cycle FLDs. I had an interesting question asked of me last week to do with the shorter cycles and when the amplitude of the shorter cycles increases, and it was mentioned that I had commented that this was a bearish omen in a previous video. So let's just spend a minute speaking about shorter cycles and when shorter cycles develop higher amplitude and what it means. In order to understand the implications of when shorter cycles develop a greater amplitude, I'd like to go back to observations about the way in which price interacts with the FLD. And I should point out that this is not something that Hurst ever spoke about in his original work. This is merely the result of observations that I've made over the years in terms of how price tends to interact with the FLDs. So in this diagram, which is probably one that you've seen somewhere, this dashed pale blue line is the FLD, and this dark blue line is price. And this is, of course, an idealized graphic of the way in which these interactions work, and it explains why they work in this way and so forth. But the important thing is that, of course, the interactions are labeled with these red buttons, and they are the interactions we've been speaking about all this time. So I'd like to point out the 2 occasions throughout this full sequence of interactions in which the shorter cycles exhibit a greater amplitude, generally speaking. Not always, but generally speaking, the shorter cycles exhibit a greater amplitude, and let me change the color of this pen, during this period of time over here. In other words, the B category interaction, when price comes down and finds support at the FLD, and over here at the G category interaction, where price comes up and finds resistance at the level of the FLD. Now, the reason why this happens is a little complicated, so I'm not going to go into it here, but you should know that it is during these times that we often see greater amplitude for the shorter cycles. Of course, if it happens during a B category interaction over here, then the implication is bullish, because it means that the shorter cycles are growing in amplitude as price comes down to find support at the FLD, after which price is going to move upwards. So that has bullish implications. When the shorter cycles gain an amplitude around about a G category interaction, where price comes up and finds resistance at the level of the FLD, then it does indeed have bearish implications. So I hope that answers that question. When the shorter cycles develop a greater amplitude, it is not always bearish. It depends where you are in the bigger cycle picture. So to get back to our analysis question, this extraordinary 3-week tracking along the 20-day FLD is because of the 10-day cycle gaining in amplitude. What does it tell us about the placement of the 80-day cycle trough? Honestly, it doesn't really tell us anything in particular about that trough. I find the interactions with the FLD very powerful for helping to clarify the analysis or at times to challenge the analysis. And the interaction between price and this 20-day FLD at the moment doesn't really give me any information about the position of that 80-day cycle. It does, however, give us some other information which we're going to look at in a moment. But now, I said that we can still make confident trading decisions, and I'm going to demonstrate to you how we can do that. The secret is to look at all of the analysis possibilities and ask yourself what the implications are of that analysis. Ask yourself, if this is the true analysis, then what am I expecting next? And so we're going to do that. If the 80-day cycle trough did form on the 6th of August, then what are we expecting next? Well, we probably saw the 20-day cycle trough over here on the 26th of August, and what we're expecting next is for price to come down into the 40-day cycle trough. Is there a potential trade that we could make on the basis of that? Yes, there is. When price crosses down below the 20-day FLD on its way to the 40-day cycle trough, that would give us what we call a D category interaction, which is a short trading opportunity. Now, unfortunately, the interaction between price and the 20-day FLD has been a little bit messy, and so we perhaps need to be a little cautious at actually declaring that price has crossed down below the FLD because it's been crossing above and below it every other day. So you might want to give yourself a little bit of space. But the trading opportunity that this analysis provides us with is a short D category trading opportunity for price to go down into the 40-day cycle trough. I would like to point something else out while we're here, which is this 40-day cycle trough has a nest of lows. It's expected about the middle of next week, in other words, the second week of September. But do you see this very important 40-week cycle circle floating directly above that 40-day nest of lows? I mentioned earlier there's a wealth of information at the foot of your chart, and it's very important to pay attention to it. So what does that 40-week cycle circle mean at the foot of your charts? Well, that is positioned on the basis of the recent wavelength of the 40-week cycle. And what Sentient Trader does is it counts back 6 of those 40-week cycles, and it calculates the average wavelength of those 6 waves of that cycle, and it says, well, this is the recent wavelength of the 40-week cycle. Now, 6 waves of the 40-week cycle is about roughly 240 weeks, so we're looking at about 5 years, and so the software is looking back 5 years and calculating the average over the past 5 years. Now, of course, we know the principle of variation tells us that the wavelength is constantly varying, which is why these circles are not cast in stone. But they do provide an indication of a harmonic that is working in the market. There has been a rhythm which is due to complete in the second week of September. And so, although that is not set in stone, that's definitely when we expect the 40-week cycle trough to occur, not by any means, because we need the cycle model to be integral, to be complete. And so all the shorter cycles are obviously very important. But that floating circle and whiskers above the 40-day cycle trough increases the possibility or probability that there will be an important trough in about the second week of September. And so that adds further confidence to our possible trade of going short in a D category interaction. Now let's do the same thing for the other analysis and ask ourselves the same question. So we don't know absolutely where this 80-day cycle trough formed. And there is still the possibility, we don't have the diamond there is still the possibility that price is going to come down and form that 80-day cycle trough. You can see there have been 92 days since the 20-week cycle trough on the 3rd of June. What is the maximum length of an 80-day cycle? As a general rule of thumb, I use 101 days, but that's very much a rule of thumb. This is not an absolute science. So time is definitely running out for this 80-day cycle. I believe it is probable that the 80-day cycle has formed a trough and that it is already behind us. but it is possible that it still looms ahead of us. So here we have two possibilities. The one possibility is that the 80-day cycle trough is still ahead of us, which means that the trading opportunity that we would take, you should know, is an H category short trade. And that this here was the F category interaction. This was a very prolonged G category interaction, and the H category interaction is next. What is the H category interaction? It is a short trade again. So although we have two very different analysis options, both of them are presenting the possibility of a short trading opportunity. Now, what if in fact the 80-day cycle trough did form here on the 26th of August? Well, that is a slightly different situation, because then the trough that price is going to drop down into is only a 20-day cycle trough. What do we expect at the time of a 20-day cycle trough? We expect a B category interaction in which price would find support at the level of the FLD and then continue moving upwards. So here we have contradictory information. In my opinion, this is not such a viable analysis, but it is possible, so we need to consider it. How then do we make confident trading decisions? We have two possibilities indicating a short trade, and we have a third possibility indicating that price is going to find support at the level of the 20-day FLD and that we should therefore consider a long trade next. Well, this is how we resolve it. When we have conflicting information like this, then we can do one of two things. The one thing that we could do is that we could keep watching this market carefully and see how price does react with this FLD. And if it finds support and bounces up again, then we're not interested in entering our trade. If, on the other hand, it does drop down below the FLD, then we might enter into a short trade at a lower level. So we're not going to be very aggressive in terms of entering our trade. We're going to first watch and see. That's one possibility. The other possibility is that we can weigh up the options and say to ourselves, well, we think it is most likely, because we have more options indicating a short trade than the potential for a long trade. And so we enter the trade tentatively. Perhaps we make small short entries. We don't put everything in at once. We make smaller entries if price behaves in a way that seems to indicate that it is moving down, which clearly it would need to break down below that FLD before we would consider doing this. And so we could stagger our entry and build our position as price starts moving down towards the expected trough. Now, there is another piece of information that we can use to help to inform our decisions, which has to do with, of course, another FLD. I showed you the 80-day FLD in a previous market update, so let's revisit that 80-day FLD and consider what is happening with that FLD. And there is the 80-day FLD, which I showed in a previous market update. There is our A category interaction. Here is our B category interaction as price came down and found support a little bit above the 80-day FLD, indicating some bullishness in the market. Here is the C category interaction as price bounced up and away from the FLD. The D category interaction as price crossed down below it. The E category interaction as it crossed above it. Here is the F category interaction as price crossed down below that FLD. So what are we expecting next? It's really simple. We're expecting the G category interaction next, according to this analysis. So can you see how, having completed its move down, then the shorter cycles increased their amplitude, which I discussed a moment ago when I showed you that idealized picture of the way in which price interacts with the FLD. And I said at the time that that often happens at about the time of the G category interaction. So when a 10-day cycle's amplitude increases, the odds are very high, in my opinion, that we are in the process of forming a G category interaction with the 80-day cycle FLD. What do we expect? We expect the 80-day FLD to provide resistance In other words, indicating that price is expected to turn down and come down into this 40-week cycle trough. You can see the nest of lows over here in about the middle of October, and of course we have this circle over here, which we should not ignore, but the 40-week cycle trough is, according to this analysis, expected in about the middle of October. This additional information and this very clear interaction between price and the FLD at this scale really increases my confidence in the fact that the next strong move in the markets is likely to be a short move. In other words, the markets are likely to move down into that 40-week cycle trough. But let me throw a complete spanner in the works and show you yet another analysis. Let me be clear, I do not want to show you all these analyses in the hopes of confusing you. On the contrary, I want to show you how we can, despite the analysis possibilities, make a confident trading decision. So this analysis has the 40-week cycle trough on the 6th of August. It's a possible analysis. In my opinion, it's not a very good analysis, and I'm not going to spend too much time discussing it, but it places the 20-week cycle trough over here in March, the 80-day cycle trough over here in June. You can count those bars, you can compare it for yourself. In my opinion, it's not a very good analysis, but it is a possible analysis. And so how is it that we can look at this analysis and yet still make a confident trading decision? Well, there are two little details to this analysis that are worth pointing out. The first is that in terms of interactions with the 80-day cycle trough, following the 40-week cycle trough, if it formed on the 6th of August, we would be expecting an A category interaction over here with the 80-day FLD. So we would expect price to cross up above the FLD and move strongly upwards. If price does that, and it would have to do it really soon to indicate that that was an A category interaction, then this analysis will become more likely. But my point is that price would have to move up really soon because it is at the level of the 80-day FLD on this analysis where it should be finding some resistance. On the other hand, if price moved down from the 80-day FLD, that provides us with information that the 80-day FLD has provided resistance, and therefore this analysis is pretty much discounted. But there is something else to be said about this analysis. Let's assume that you were not considering all the possibilities and the options, and this was the only analysis that you were seeing. Let me again ask you, what is the next thing that we are expecting according to this analysis? Well, here was the 40-week cycle trough on the 6th of August. That was probably the 20-day cycle trough. There you can see the nest of lows. And here is a rather messy nest of lows for the 40-day cycle trough. So what are we expecting next? We are expecting price to come down, drop below the 20-day FLD in a D category interaction to reach the 40-day cycle trough. Can you see how even with this very different analysis, with a really big different magnitude to the trough on the 6th of August, we still have the same trading decision, which is a short D category trade. So again, even if this is the correct analysis, we can make a confident trading decision, which is that short D category trade. Now, there is one final point to make in today's video, and that has to do with the 40-week FLD that I spoke about in a previous market update. I've had many questions about this. The important thing really about this 40-week FLD is that if you're looking at it on a daily chart, it can be kind of frustrating because price has interacted with the 40-week FLD many times. That's what you expect from a 40-week FLD on a daily chart. The best way of looking at the 40-week FLD is, of course, using the weekly chart. And so here is that 40-week FLD on the weekly chart, and as I discussed in the previous market update or an earlier market update, this is probably, in my opinion, an E category interaction, which means that we are expecting an F category interaction at around about this time. The fact that price has taken some time working down to cross below the FLD is not very unusual, so our expectation according to this analysis is also definitely for the market to move downwards. I do hope that you found this market update interesting. I hope that I'm not going into too much detail. Let me know if there's too much detail or too little detail. I'm trying to cover all the bases in these market update videos. If you have any questions or comments, please leave them below this video.